Hey everyone, welcome to The Explainer. So, did you know the US tax code is literally over 70,000 pages long? Yeah, no wonder most people just completely avoid it. It's incredibly overwhelming. But today, we're doing something a little different. We're going to dive right in and explore exactly how the wealthy legally navigate that massive document to keep way more of their capital. We're talking about the mechanical realities of business write-offs, the magic of depreciation, and exactly how the rich play the rules of the game to their absolute advantage. Let's get into it.
But first, we really need to address this incredibly common frustration. Why does your salary, even if it's a fantastic six-figure salary, why does it often leave you feeling kind of broke? It's honestly super common for high-earning professionals, people bringing in thousands every single month, to still find themselves stuck living paycheck to paycheck. You're just running on a financial treadmill thinking, wait, I make good money, why don't I actually feel wealthy? Well, we're going to answer that today. Because the harsh reality, a salary alone is fundamentally designed to keep you comfortable. It's not designed to make you rich.
Now, before we get into the nuts and bolts, there's a huge fundamental distinction we absolutely have to make here. Tax optimization is completely legal, while tax evasion is highly illegal, okay? We are strictly looking at the objective, totally legal realities of how this system is designed to work. No shady, under-the-table loopholes here. Look, tax evasion will land you in prison. But tax optimization, that's just understanding the financial rules of the road so you can drive your wealth vehicle as efficiently as possible.
So here's our roadmap for this explainer. First, we'll look at the salary tax trap, then unlocking the tax code. After that, we'll hit the business write-off advantage, move right into real estate and depreciation, and finally, we'll wrap things up with how to think like an owner. Okay, section 1, the salary tax trap, trading finite time for money. So when you work for a paycheck, you're doing something very specific. You're trading your finite time for money. And that brings us directly to the number 24. There are only 24 hours in a day. That is an absolute hard limit for all of us. No matter how incredibly hard you work, no matter how many coffees or energy drinks you chug down, you literally cannot scale physical time. And because your salary is tied directly to those hours you can work, your active income has a massive hidden ceiling. You're capped. If you want to build real wealth, you have to do what the wealthy do. Completely decouple your income from that 24-hour clock. Moving right along to Section 2, unlocking the tax code, reframing the rules of the game. To actually escape that 24-hour trap, you need a total mindset shift about taxes. Instead of viewing the tax code as a punishment, the wealthy view it as a massive behavioral reward system. Seriously, governments actually want certain things to happen in the economy, right? They want job creation, so they heavily reward people who build businesses. They desperately want people to have places to live, so they offer huge tax incentives to those who create housing and real estate. And they want economic growth, so they reward you for investing capital. Basically, if you do exactly what the government wants you to do, they essentially hand you massive tax write-offs as a giant thank you. This right here brilliantly illustrates the huge divide between these two financial worlds. It's literally like two different rule books. Look at average earners. You earn your salary, the government instantly takes its cut right off the top, and then you try to live your life and spend whatever crumbs are left over. But business owners, they operate under a totally different sequence. They earn revenue, they spend money on their business first, and then, only then, do they pay taxes on what's left. This simple sequence of earn, spend, then tax, it creates an absolutely massive cash flow difference over time. Which brings us to Section 3, the business write-off advantage. The power of spending first. This is the fundamental tool in the wealthy rulebook. A business write-off is just a legitimate business expense that gets deducted from your gross income before your taxes are even calculated. Just think about what that actually means for a second. Need a new computer, high-speed internet, maybe a vehicle for your business? You get to buy those things with pre-tax dollars. You get to spend your money to grow your enterprise first, and the government only taxes the profit that's sitting there at the very end. It's a total game changer that drastically lowers your taxable income. Let's break this legal mechanic down into 3 super simple steps. Step 1, you generate revenue through a business entity. Step 2, you spend money on eligible business write-offs, the things actually required to operate and grow your enterprise. Step 3, you pay tax only on the remaining profit. Contrast that with a standard employee who gets taxed the literal second their paycheck is printed. By structuring their income streams this way, business owners are legally protecting immense amounts of their wealth, just by playing by the government's own rules. All right, Section 4, real estate and depreciation. The ultimate legal wealth hack. So if business write-offs are a great tool, real estate is widely considered the ultimate legal wealth hack, and it's all because of this one little word: depreciation. It sounds like boring accounting jargon, right? But it's actually incredible. It's a method where businesses deduct the loss of an asset's value over time. Here's the mechanical reality of how this works. The IRS just naturally assumes that a physical building is slowly falling apart over the years. The roof ages, the floors wear out, right? So they allow you to take a paper loss on your taxes for all that expected wear and tear. But here's the absolute magic trick. In reality, that real estate is highly likely going up in value, all while putting rental cash into your bank account every single month. So you're showing a loss on paper to dodge taxes while experiencing totally real cash profitability in the real world. No way, right? But it's true. And notice how totally different mindsets use this to their advantage. An average earner, they tend to buy depreciating luxury assets. You go out, buy a flashy new sports car, drive it off the lot, and boom, it instantly loses 20% of its value. It's draining your actual wealth in real life. But the wealthy, they buy depreciating real estate. Their asset saves them taxes on paper through depreciation, but out in the real world, it's actually producing monthly cash flow and appreciating in total value. One destroys your wealth, the other builds it on autopilot. Finally, Section 5, Think Like an Owner, closing the identity gap. Look, all these tax codes, depreciation schedules, and write-offs we just talked about, they mean absolutely nothing if you don't fundamentally change how you interact with money. A consumer mindset trades their cash for status, just to impress other people. And the result? They stay trapped by high salary taxes and that 24-hour clock we talked about earlier. An owner mindset, on the other hand, trades their cash for assets. They buy businesses, they buy real estate. This allows them to actually leverage write-offs, use depreciation, and build automated cash streams. Real wealth doesn't just come from working harder. It comes from acting like an owner and playing by the correct rulebook. The absolute core takeaway from all of this is that identity shift. You have to move from consumer to owner. Prioritizing long-term freedom and asset production over short-term luxury is what allows your investments, your real estate, and your businesses to compound daily. They are working for you while you sleep. Honestly, this single psychological shift can change your entire financial destiny. So I want to leave you with this final provocative question. Will you continue acting as a consumer, staying trapped by active income limits and paying high salary taxes? Or will you shift your identity today to become an owner, building automated assets and legally optimizing the wealth you build? The rules of the game are out there for anyone to learn. It's entirely up to you which rulebook you choose to play by. Thank you so much for joining me for this explainer, and I'll catch you next time.